Stocks soaring to all-time highs immediately after China confirmed its agreement to phase one of a trade deal with the United States. The market's just shrugging off some of its earlier gains, but consumer confidence is near a record level. The Fed is holding steady with rates for now, and the economy is booming. But uncertainty seems to be easing, so why are we back in the red? Well, actually, you can see the Dow just up about 6 points, so not as bad as before, but we got to go to Kinsview Wealth Management CIO and Fox Business contributor Scott Martin, who's joining me right now from Chicago. Scotty, let's talk about these markets right now. Wouldn't you say that this phase one trade deal has kind of already been priced in?
Yeah, I think so, Christina. And whatever phase one is, really, as the details are still coming in, I think the market is trying to figure out, or let's say handicap, what it's going to ultimately look like. I do think what is nice, though, is we are seeing the repeal, we think at least, of some of those previous tariffs, which was maybe not so much expected versus just the hold off on the tariffs on Sunday. So to me, that's what we saw the bounce for yesterday. But today, after a nice run here, say so far month to date and certainly quarter to date, it makes some sense that some profit taking is happening.
If we're talking about profit taking forward, just this Santa Claus rally, which you kind of missed last year, especially on December 24th when you saw markets drop more than 500 points. Don't we have a situation where all the goods have already been imported into the United States, so we really won't benefit so much from this phase one trade deal within the month of December?
Yeah, that's true. But you know as well as I do, Christina, the market is very forward-looking, and yes. I think it ends up being one of these situations where, yes, I agree with you. Most of December was probably taken care of, but then the first quarter next year, when the consumer, as strong as they are, is likely to spend almost as much money, let's say, that they will in Q4, I think does give the market some relief. Certainly some of the S&P companies, industrial companies, I think as well, some relief that, at least going forward, their earnings exposure and certainly some of the cost exposure they may have because of these aforementioned tariffs that are coming off, that actually looks a lot better today.
So then for our viewers, and we got to benefit from having you on this show, what are you looking at specifically, especially if we were to get in right now? You're seeing these markets hit highs. Is it a time to just stay on the sidelines, wait for the Santa Claus rally to just fall off and then get back in January? Any suggestions?
Yeah, I don't know if I'd wait for anybody to exactly knock Santa Claus off the sled or anything like that to take some profits, or at least, let's say, take some opportunity. But you're right. I think your thinking is on point with respect to we've had a great run. I mean, some of the companies, Christina, that we love, that we've talked about on air before, whether it's Apple, Microsoft, Amazon, Google, they've had good runs this year. So I wouldn't chase those right here. But look for some of the industrial companies, maybe some of the little, maybe or lesser known tech companies
that
have fallen back.
Can you name some?
And then those are the ones to pick up.
Can you give me some names?
Yeah, I mean, we like 3M actually here as an industrial company. If you look at 3M versus, say, some of its peers, it's really been held back due to some accounting concerns and some earnings concerns. I think 3M is one to pick up in the industrial space. And then even today, Broadcom having a pretty rough day, but overall having a nice year. I think Broadcom's going to reemerge here into the end of the year. AVGO.
Okay, well, I'm writing those down so that I can follow up with you on that, because often we don't do that. Scotty, thank you, as always.
See ya.
Bye.